Fund administration versus fund accounting. Roles, workflows, and team responsibilities explained. Hello, and welcome to Candimentor. Today, we are decoding the two backbone functions inside private equity operations: fund administration and fund accounting. Think of them as two sides of the same machine. One handles the operations, and the other handles the numbers. By the end, you'll know what each team does, how they coordinate, who owns which deliverables, and what skills are needed across the fund operations ecosystem. Why FundOps exists. Private equity funds manage money that doesn't belong to them. Because of that, they need strong controls, reporting systems, and compliance frameworks. The back office is typically split into two main pillars: one for processes, called fund administration, and one for financial accuracy, called fund accounting. Together, they ensure accurate NAV calculations, clean reporting, and fully compliant investor operations. What fund accounting focuses on. Fund accounting is the financial heartbeat of the fund. This team tracks every cash movement and every valuation adjustment. They monitor capital calls, distributions, management fees, and carried interest. And they produce the quarterly NAV, the financial statements, and the audit files. When LPs look at numbers, they're looking at fund accounting's work. What fund administration focuses on. Fund administration makes sure the operational plumbing works. They manage investor onboarding, KYC, subscription documents, and communication workflows. They prepare capital call notices, distribution notices, and maintain investor records. If fund accounting handles the why, fund administration handles the how. High-level difference. Here's your one-sentence comparison. Fund accounting manages the numbers. Fund administration manages the processes. Accounting answers, what happened financially? Administration answers, how did we run the fund operationally? Key outputs of fund accounting. This team creates the numerical backbone of the fund. Their outputs include quarterly NAV calculations, journal entries and the entire general ledger, fair value calculations for each portfolio investment, performance ratios like IRR, TVPI, and DPI, carried interest accrual schedules, full fund-level financial statements. These outputs flow into every investor report. Key outputs of fund administration admin focuses on documentation and investor operations. Typical deliverables include capital call notices and distribution notices, investor onboarding, KYC and AML files, waterfall tracking for distributions, investor reporting packs, coordination with banks and custodians. Think of this team as the interface layer between the fund and its stakeholders. Fund accounting, core daily monthly tasks. On a regular basis, fund accounting reviews investment transactions, expenses, and fee accruals, books journal entries into the ledger, maintains partner capital accounts, updates fair value adjustments for each portfolio company, reconciles bank accounts, loan schedules, and trade activity. This is the mechanical work that ensures NAV accuracy. Fund administration, core daily monthly tasks. Admin's day-to-day looks very different. They maintain the investor registry, process subscriptions, transfers or redemptions for open-ended structures, generate notices and coordinate deadlines, manage compliance calendars, coordinate with custodians, law firms, and LP relations teams. Their job is to ensure nothing slips through operational cracks. NAV preparation, accounting ownership. NAV, the net asset value, is owned by fund accounting. They prepare the NAV pack using cash reconciliations, fair value schedules, capital account roll forwards, expense accruals, and carry accruals. The admin team then uses this pack to prepare investor letters and verified distribution lists. So accounting produces the numbers, and admin communicates them. Capital calls. How both teams interact. Here's how capital calls get executed. Fund accounting calculates how much money needs to be drawn. Updates LP capital accounts after the call. Fund administration drafts the call notice and sends it to LPs. Tracks incoming wires and confirms receipt. Both must stay perfectly coordinated. Mistakes here damage trust. Distributions split responsibilities. Distribution flows mirror capital calls. Fund accounting calculates how much can be distributed, allocates return of capital, profit, and carry. Fund administration prepares and sends distribution notices, confirms bank transfers, and updates investor systems. One team does the math, the other delivers the money. Valuation process. Accounting-owned valuation is the responsibility of fund accounting. They coordinate with the GP and third-party valuers. They apply IND AS 113 fair value methods such as DCF, public comparables, transaction multiples. Admin supports by ensuring all valuation documents are complete and archived. Investor reporting, joint deliverable. Investor reporting is shared work. Fund accounting provides NAV, performance numbers, and financial statements. Fund administration formats reports, builds the data room, and distributes to LPs. Think content versus delivery. Audit and compliance support during audit season. Fund accounting builds the audit binder with JEs, valuations, reconciliations. Answers technical questions on accounting. Fund administration provides legal documents, investor agreements, and KYC. Tracks compliance deadlines and filings. Together, they help auditors build a full picture. Uncoined. Technology and systems used. Different tools for different jobs. Fund accounting uses eFront, Investran, Allview, Geneva, Wall Street Office. Fund administration uses investor registry platforms, AML KYC systems, CRM tools, document vaults like Intralinks or DataSite. Organizational structure. Fund accounting. A typical structure looks like this: fund accountant, senior accountant, controller, CFO. They work heavily with investment teams, auditors, valuation experts, and tax advisors. Precision and technical expertise matter most here. Organizational structure. Fund administration admin teams follow this ladder. Investor Services Associate, Senior Admin, Administration Manager. They work closely with legal teams, compliance, custodians, and LP relations. Accuracy, communication, and process discipline are key skills. Odd. Who they report to. Fund accounting usually reports to the CFO or fund controller. Fund administration typically reports to the COO or operations head, or to an external fund services provider if outsourced. Outsourcing models. Many PE funds outsource both functions. Common providers include SS&C, State Street, Citco, Apex, IQEQ, Alter Domus. Even when outsourced, the GP reviews and approves all outputs. Interaction workflow. A simple 5-step collaboration loop. 1. Accounting identifies a requirement, an investment, expense, or drawdown. 2. Admin drafts investor communication. 3. Accounting updates ledgers and capital accounts. 4. Admin executes payments or notices. 5. Both compile the quarterly investor report. Smooth cycles equals smooth fund operations. Risk management. Split responsibilities. Each team owns different risks. Fund accounting. Risk of misvaluation. Incorrect NAV. Wrong allocations. Fund administration. Risk of operational errors. Wrong notices. Missing documents. Failed KYC. Also compliance failures, such as delayed regulatory filings, end. Regulatory Requirements Responsibility Split looks like this. AML, KYC, Admin. Valuation Policy Alignment, Accounting. FATCA, CRS Reporting, Admin with accounting support. IND-AS IFRS Compliance, Accounting. Both teams must stay tightly coordinated to maintain regulatory hygiene. Skills needed in fund accounting. Key skills include strong accounting fundamentals, deep knowledge of IND-AS/IFRS, NAV preparation and waterfall modeling, understanding of DCF, multiples, and fair value measurement. This team needs analytical discipline. Skills needed in fund administration. This function needs strong communication skills, rigorous document handling, AML KYC knowledge, workflow and deadline management. This team ensures operational reliability. Closing summary. Fund accounting is the financial engine responsible for NAV, valuations, and capital accounts. Fund administration is the operations engine responsible for notices, onboarding, compliance, and investor management. Together, they create a complete support system that allows private equity funds to operate accurately, legally, and transparently. Mastering both sides gives you the complete picture of modern PE fund operations. Final takeaway: fund accounting calculates the truth, fund administration delivers the truth, and private equity depends on both to maintain trust with LPs and credibility with regulators.